Welcome to Yahoo Finance Live. I'm Julie Hyman. That is Josh Lipton. We're here at the New York Stock Exchange, and we've got the 3 at 3 for you, the top 3 stories at 3 p.m. We start with markets here, and Treasury yield specifically surging to a fresh 15-year high. The 10-year yield now at 4.6% on the heels of stronger durable goods data and rising oil prices. A closer look at the market action is coming your way straight ahead.
And the UAW is gearing up to expand its strike on Friday. Yahoo Finance confirming now that the union will target additional plants if significant progress has been made on contract negotiations. UAW President Shawn Fain expecting to make that announcement on Friday morning, just hours before workers would walk off the job. It is unclear in the reports if this next expansion would target all 3 automakers, and last one only affected General Motors and Stellantis.
Plus, Meta unveiling its newest headset, the Quest 3. It comes as Apple prepares to enter the virtual reality space with its Vision Pro headset. But the price of the Quest is $499, significantly below the expected $3,500 price tag for Apple's upcoming device. Our own Dan Halley already got his hands on the Quest 3. He's going to be giving us his review later this hour.
All right, now let's take a quick look at the markets right now and see how things stand. Mixed here with the major averages. You can see the S&P 500 is basically flat. The Dow, meanwhile, remember, it had been up as much as 100 points during the session, then dipped lower. We are, though, off the lows right now, down about 0.2% or 60 points. The tech-heavy Nasdaq up about 0.3%. Let's also take a look at Treasuries, the yield on your benchmark 10-year that is ticking up. In today's trade, it's now over 4.6%. Wow. You can see that. The higher rates, of course, a headwind for the stock market as they can reduce the appeal of riskier assets like equities. And finally, let's take a look at oil prices on the move as well. We know rising energy prices along with those higher borrowing costs, that is a challenge for the consumer. And you can look at WTI there, tacking on nearly another 4%, 93.75, Julie.
And I want to just take a little bit of a deeper look at the market action inside the Yahoo Finance Interactive, because it's important, as you mentioned, not just to look at that board with the 3 major averages, but look at the action throughout the day. There's the Dow Jones Industrial Average with the moving lower until just before 2 p.m. and then not spiking higher, right, but pairing the declines pretty dramatically here. We saw the same kind of movement for the S&P 500, which peaked into the green, and the Nasdaq as well. What's interesting is, as you mentioned, this is coming even in the face of higher rates, which have been so problematic for stocks in recent days. And even with the gradual increase in the 10-year yield today, that's not what's happening. What gives here? I don't know exactly, but I can tell you what's going on with the sectors. And as oil has been steadily gaining, energy stocks have even more been solidly in the lead for gains today. So maybe that's part of what's going on with stocks here.
I mean, I think September right now living up to what we expect, right? Typically not a great month for the bulls. The question now is, as we wrap this up, does that carry on into October? As you mentioned, this Fed messaging, higher rates for longer, that's a headwind.
Yeah, it's a headwind, as are those higher oil prices. And one of the things that Liz Ann Saunders of Schwab, a friend of Yahoo Finance, who has been talking about for a long time here, as have a lot of other investors, is the leadership in the S&P 500 and in the markets broadly this year has been narrow. In other words, the so-called Magnificent Seven, right? Big cap tech stocks have been accounting for the bulk of the gains. And one of the ways, and Liz Ann tweeted the chart this morning, that really expresses that is to look at this Magnificent Seven price return index, which is blue there, versus the S&P 500, which it has outperformed. But even the S&P 500 has a significant gap above the equal weight version of the S&P versus the market weight version of
so
the
it's
S&P.
so interesting. So the S&P 500 there still tacking on nice gains for the year. But as you said, that's Magnificent Seven. That's Apple and Microsoft and Amazon. If you had bet, Julie, well, they're just going to pull along everyone for the ride, as she points out, in the equal weight, not so much.
Yes, but if you had, I guess, just bet on those, you'd be doing okay. Yeah.
All right, well, moving on. The likelihood of a government shutdown growing every day as we get closer to the Saturday night deadline, both in the House and Senate taking incremental steps overnight on spending packages, but still remain far apart to getting a deal actually done here. Our next guest has plenty of experience with government shutdowns. He was in House leadership during the most recent shutdowns in 2018. And joining us now is former Democratic New York Congressman Joe Crowley. Congressman, thank you for joining us. And Congressman, can you hear us? We might be.
I think we can't hear you, unfortunately.
We can't hear you, Congressman.
No?
Nope.
I'm trying to unmute.
Okay.
I'm unmuted.
We gotcha.
Now we
Okay,
got
great.
you. Hey, listen, that is the joy and adventure of what we do here, Congressman. Thank you for joining us. My question for you, Congressman, would be, listen, you have a lot of experience, obviously in Washington, on Capitol Hill. You've been through this drama before. We look like we are careening toward this government shutdown. Do you see any reason for optimism here? Do you think we might avert this, or does this look, as we sit here now on Wednesday afternoon, like a done deal to you?
It looks pretty tight right now. Everything would have to go perfectly in order to even avoid a temporary shutdown. And I say that because looking at the Senate, what they've been able to cobble together, it's not even clear that they can actually get this past the Senate at this point, because it only takes one senator to turn it back. But they've increased both spending for disaster relief as well as Ukraine war effort. And I don't think that can pass muster right now within this hard right wing within the Republican conference in the House of Representatives.
Congressman, I'm really curious as somebody who's been through this. We talk about this all the time in the media when these shutdowns are about to happen, and then when they happen, polling shows Americans don't like it. What is the vibe typically like among members of Congress, both on the House and Senate side? Like, how acute is the pressure to get this done?
It's very strong. I mean, there's no question. Bill Clinton said that in his State of the Union address after his shutdown, don't ever do this again to the American people, because there's a tremendous cost to the American people, to the taxpayers.
Well, things didn't turn out quite that way, did they?
No. Unfortunately, it hasn't worked that way. And quite frankly, it's when Republicans control the House where you see this more often than not. You saw it during Clinton, you saw it during Obama, and now you're going to potentially seeing it here with Biden. It did happen during the Trump administration. That's when Republicans controlled both houses at that time. So there's a bit of a pattern that's developed here. But when you're dealing with such a far hard right wing and such a narrow margin in the House, John Boehner had the ability to go to Nancy Pelosi. So did Paul Ryan in the past, and really work together to get something done. That doesn't seem to exist under the McCarthy regime.
And I mentioned, Congressman Crowley, as something culturally shifted on Capitol Hill. You worked there for a long time. Are there more lawmakers perhaps today who are more interested in their profiles getting on cable news, on social media, as opposed to, let's say, doing the hard work, negotiating, compromising, getting legislation done? Do you feel like there's been any kind of cultural shift among lawmakers?
That sounds like a softball ready for me to hit it out of the park, given my own circumstances in terms of my loss in 2018. I do think you see many, many more performers in terms of the politics. And that's not to say the performance has no place in politics. It does. But in terms of getting the job done, you really need to be able to work across the aisle and develop that trust. And right now, what McCarthy is lacking, he doesn't even have the trust within his own party. So I think what you're seeing many of these far right wingers, they really believe this stuff. They really believe the only way they get their change is to shut down the government. But there's an awful lot of cost at stake when that happens. It's kind of, it's kind of incongruent to think you're going to shut down the government because you want to save money. At the same time, it's going to cost you billions of dollars if you shut down the government.
Right, exactly. I mean, you still have your ear to the ground in Washington. There is also some movement on a couple of bills that would permanently end these kinds of shutdowns, or at least that's the goal. Any traction there, do you think?
It's hard to really put that into effect, because basically the Congress can do whatever it wills. In other words, as long as it stays within the confines of the Constitution, it can do whatever it wants. And so, one of the responsibilities of Congress is to put together these spending bills. We don't want this done solely by the executive without the input of Congress. And so I think that's why this is critical. Congress needs to do its job, period, amen. The American people deserve no less. And whether it's Democrats-controlled or Republican-controlled House Representatives, they need to do their job. And we just don't see that happening right now.
And Congressman Crowley, last question. Just speaking of lawmakers doing their job, listen, we face, and you know this, very serious fiscal challenges in this country. The deficit has doubled in the past year. National debt is some 33 trillion. That is an enormous burden to pass along to our kids. What is the answer to that? I mean, some have argued, listen, what we need to have is a bipartisan commission to really come up with solutions. Is that the next step to deal with these very serious fiscal headwinds we're dealing with?
Yeah, Josh, we've had bipartisan blue ribbon panels in the past to come up with suggestions. The hard part is actually implementing those suggestions. And I think it's going to take, again, confidence on both sides of the aisle and really putting the heads down and tackling this issue for the long term. It can't just be about spending cuts. There has to be a notion that the American people will pay for what they need to have done. And we're a very, very wealthy country. We are the wealthiest country in the history of the world. We can figure this out, and I think we will.
I hope you're right. Former Congressman Joe Crowley, thank you so much for joining us. Really appreciate it.
Thanks, Julie. Thanks, Josh.
Let's check in on some of today's top trending tickers now, starting with Tesla. Those shares are lower after Deutsche Bank cut its price target to $285 from $300. Analyst Emmanuel Rosner there says the EV maker could miss third quarter delivery and production expectations. The larger risk with Tesla, he says, is the downside expectations for 2024 on both growth and earnings. And Josh, I think safe to say Rosner's one of the more closely watched analysts who covers Tesla here. And it is interesting when he says his base case for Tesla is that it'll guide to about 2.1 million deliveries next year. Consensus is 2.3.
Yeah, what he says here is interesting because basically the note summarizes how there was this Deutsche Bank Investor Day, and what he heard at that Investor Day was that Tesla may no longer plan to expand output in Austin and Berlin factories. So he thinks Tesla will forecast, as you said, 2024 deliveries below the street. But he kind of sees a silver line there. If they're going to, he says, not push so hard on volume, maybe he says that could be less pricing pressure. So he still rates this a buy.
Right. So maybe he says those automotive gross margins that people are watching so closely for Tesla could start to improve a little bit. We'll see. Well, sticking with EVs, let's talk Lucid also. Those shares are higher on the news that the company is going to open the first ever car manufacturing facility in Saudi Arabia. To start, it has the capacity to assemble 5,000 Lucid vehicles per year. Once finished, it's expected to have the capacity to produce a total of 155,000 EVs, Lucid EVs, per year. So that would be significant. It's interesting, the location of this. Lucid are they're a luxury EV. They're priced above, say, a Tesla, for example. So they obviously see in the Mideast potential for a big market.
And remember, interestingly, we saw those reports not long ago that Saudi Arabia was talking to Tesla as well about maybe setting up a manufacturing facility, though, of course, Elon Musk quickly shot that down.
Yeah, but you have to think about the backdrop as well for Lucid, but also for Saudi Arabia. Many of the oil-dependent Mideast countries are now trying to expand, to diversify, and to pivot away from being so reliant just on oil. So this and the outreach, perhaps, to Tesla, even if doesn't come to fruition, looks like it's to that effort.
Exactly right. And then last one here, shares of Cloudflare moving higher today as the cloud and cybersecurity company is joining the AI train by launching a new collection of products and apps. These will be aimed at helping customers build, deploy, and run AI models. And so really the headline here, Julie, is that the company announced this partnership with Facebook parent Meta. And the idea is, from what I understand, Meta will make its AI coding tool, Llama 2, right, available to developers building AI apps on Cloudflare's developer platform. So some are arguing that is good news. Maybe that means more recurring revenue. Maybe that means more usage.
Right, more usage, exactly. Where we are sort of in this AI cycle is interesting, right? There's all the enthusiasm that happened in the beginning of the year. Now we're squarely in the product development and monetization phase. And so the market seems to be reacting positively when you get actual products that are being introduced.
And then someday maybe actually fresh revenue.
Yes, making money from those projects. Exactly. All right, let's talk about NextEra Energy. It's sinking today after the company reduced expectations for its limited partner distribution, now estimating per unit growth rate to be between 5 and 8% per year through at least 2026, with a growth rate of 6%. This company owns wind and solar projects. It's also a utility provider. And the company also announcing a sale today, by the way, also of its Florida City gas utility for $923 million in cash, but that's not, it seems, outweighing some of that other outlook news that the company came out with.
And by the way, just bring us back full circle, talking Fed, the CEO saying it is tighter monetary policy, higher interest rates affecting the financing need to grow distributions at this 12%.
Yeah, really interesting there as we start to see some real concrete examples of the effect that higher rates are having.
All right, well, we are just getting started here on Yahoo Finance Live. Coming up, are consumers finally facing the effects of this year's rate hikes? We break down the lagging impacts on the other side. Plus, it's Stand with Crypto Day, and Coinbase is attempting to build support among lawmakers to pass new rules for the industry. We speak with Coinbase CEO Brian Armstrong later in the hour. And shares of Micron in the red today ahead of their latest quarterly earnings. We've got you covered on those numbers and much more as Yahoo Finance continues.
Good morning. This is Yahoo Finance.
Big news, 3 things that you need to know.
We just got the announcement.
What happens now?
I got a question.
What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed, fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings.
And they give you information if you watch them closely.
President Bostic, President Investor Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this.
And we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You gotta scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
Let's do a quick check of the markets now, sponsored by Tasty Trade, and it's a little bit of a weird day. I know that's not a very artful term there, but the Dow trading lower right now, but up off the lows of the session, even though rates are higher, as we pointed out earlier. Energy stocks are in the lead when it comes to the S&P 500, the Nasdaq gaining 0.4%. And also, let's take a look at the VIX here, the volatility index, as we see this mixed picture overall in stocks. So volatility come down a little bit, not surprising there with the S&P and the Nasdaq and their upward trajectory today. Something else I noticed that is a bit unusual or surprising is the outperformance today of the Russell 2000, which is up by 1.25% on the day. So outperforming the three major averages. The Russell does have some weighting in oil stocks. Maybe that's part of the situation that's going on there. But it is interesting even to see with the increase in rates that the Russell is holding up quite well. Well, consumer confidence hitting a 4-month low as inflation concerns and a risk of a recession have weighed on Americans as of late. Prices have been higher all summer, so just now starting to see the lagged effects, perhaps, of the Fed's rate hikes. Let's welcome in Jeremy Schwartz, Wisdom Tree Global Chief Investment Officer, as well as Jeff Klingelhofer, who is Thornburg Investment Management Co-Head of Investments. Thanks for being here, guys. Appreciate it. Jeff, let's start with you. It has been interesting to see this higher march in rates, but it doesn't seem to be having a very consistent effect on the market psyche. What's your take?
I think that's right. I think we need to zoom out a little bit and remember that monetary policy does act with, quote, long and variable lags. What I would say is the alchemy of very, very low interest rates is truly having an impact. We're seeing it every single day with individual pieces of data, whether that be credit card delinquencies increasing or subprime auto delinquencies increasing, or even on the previous segment, right? Companies coming out and having to cut forward-looking earnings estimates or dividends as a result of higher rates. We as consumers, governments, corporations have gotten used to very low financing. There's a very real cost to debt today, and it is having a bite, but it is taking longer for us to get to that end place.
And Jeremy, I'm interested to get your take as well. Listen, some are looking at this Fed messaging higher for longer. We look at the yield of the benchmark 10-year, we're now over 4.6%. What is your take on the economy here in the near to intermediate term? Are you in that soft landing camp?
Yeah, we definitely are surprised. I mean, we were in the camp of thinking you would see more impact. You'd see some negative payroll prints because of these higher rates, but you just haven't seen it. And so you have to say, perhaps the Fed is not as tight as you thought, or that the sort of neutral rate is a little bit higher than you might have thought earlier into the year. So the big question is now, how high for how long? Basically, maybe you get one more hike, maybe you get two hikes. We actually think they don't need to hike more. We have some alternative inflation data using alternative shelter that says, hey, inflation is basically right at their target if they put real-time data in the housing market. But they're not looking particularly at that data set. They're looking at their own numbers. But that number will come down next year. And so then the question is, when will they start pivoting towards lower rates? And will it be next summer or later? But they're keeping this message of higher for longer, and that's one of the things the market does have to confront.
And Jeff, we're going to be flying blind, and so will the Fed for a little while here if the government shuts down, because we're not going to be getting our reports on things like jobs and CPI in a very timely fashion. But you did say in your notes to us that the government shutdown is more noise than news. Is that the market doesn't seem to be reacting that much? Will it react, if it does shut down on Sunday?
I think there'll be a little bit of a reaction, but what we've seen from the past is this is just the government cycle. This is just how things get done. I wouldn't say I agree with it, but it's just how things get done. And what we've observed from the past is these shutdowns tend to be relatively short-lived and therefore have a very muted impact on true underlying economic conditions. So I think regardless of if we come in next week and the government is shut down or not, really all eyes need to be forward-looking. If this shutdown lasts for much longer than we expect, which it absolutely could, again, given just the constraints of higher financing costs and overall government interest payments increasing as a matter of fact where we are just given today, that if it continues much longer than we expect, it will bleed through in a much more significant real way. I would expect if we end next week with the government still shut down, that's really where you would probably start to see a hit to sentiment and investors really begin to take note.
And Jeremy, Jeff makes a good point, of course, when you're trying to assess the economic impact of the government shutdown, it comes down to duration. But that's just one potential challenge. As we were discussing earlier, we're looking at rising energy prices. We're looking at higher borrowing costs. These are real potential challenges for the consumer. What's your outlook on the consumer right now in the near to intermediate term? Are they holding up, or do you see real headwinds forming here, storm clouds?
Well, they have held up so far. I mean, as you know, they still have jobs, you know, so you have the unemployment rate still very, very low. You know, we haven't seen that pick up in unemployment. So people are employed and they're still spending. I mean, now, so the question is, where will these higher rates hit? You haven't seen in the housing market as much as you would think. Prices coming softer. The Case-Shiller home data came out again, increasing, which is again surprising. Now, activity is down because, you know, the affordability of houses is so much worse with these higher mortgage rates. But so I think the consumer will stay strong as long as they have jobs. Now, you know, there is challenges with these higher rates. So I agree a lot with Jeff. If I had a risk, it's the banking dynamic where we had a lot of pain in the banks in March with these higher rates. I still see people keeping too much money in checking accounts, earning nothing when you keep getting 5% plus in treasuries. And so I think that pressure on deposit outflows from banks, it's not like a bank run, but it's a slow deposit walk towards money market funds to treasuries. That's, I think, one of the risks to the economy is sort of the banking issues continuing to go on into next year.
You know, it's interesting. You could take all that into account, or you could just say the market lives and dies by just 7 stocks. I mean, that's effectively what we have seen this year. The large cap tech has been the leaders so far in a way that pulling everything else up with them. Jeff, as we look at tech going into the end of the year here, especially in the face of higher rates, are we going to be able to continue to see that outperformance?
I personally would question that. And I think that really gets to the crux of the effect of higher rates. I mean, a lot of the market, ourselves included, have been surprised at how resilient markets have been in the face of these higher rates. But there's also the flip side of it. Tech in particular is a little bit less exposed. One, they don't have nearly as much debt. They do have a lot of cash. And so if anything, that higher cash is actually additive to their margins. And we've seen that. But as we look forward, right, I think what this really speaks to is the value to me of active management, to be able to look through what has been resilient and where we think the market is likely to go. I think there are a lot of headwinds for tech, and I think it's been a great place to hang out. But in our estimation, today is where you should be pulling back a little bit, focusing a little bit more on resilience and building portfolios that are focused more through cycle. Right? The valuations today of tech are a little bit too high for us to fully stomach, but there are individual picks within the tech space that we do like.
And Jeremy, last question, you're sticking with tech. What about these recent headlines with the FTC bringing suit against Amazon? Obviously a much more active FTC under Lina Khan. What kind of overhang does that create for big tech investors?
You know, there's definitely headline risk, but there's also this underlying fundamental trend. You see, there was another headline that CVS wants to plan to cut 10% of their stores due to theft and crime and all these other things going on. You see Target cutting back. The move to online retail is real. And Amazon's got you know, what can you do to get people to buy less on Amazon? People like spending there. So I think it's hard because of the underlying services are just attracting consumers, and you know, as much as they want to try to pull that back. I agree with Jeff. Tech has been expensive, but they have some good growth rates, and so I tend to agree that the value stocks are where you want to be at the moment. Like I like high dividend value stocks in the U.S. because they're half the multiple of sort of the large cap tech. But you know, I think this is one of those headline risks that can come and overcome some of those tech leadership right now.
All right, well, listen, our thanks to Jeremy Schwartz, Wisdom Tree Global Chief Investment Officer, as well as Jeff Klingelhofer, Thornburg Investment Management Co-Head of Investments. Thank you both.
Thank you.
And Meta announcing its newest headset, the Quest Pro 3, along with some smart glasses as the company tries to dominate the AR and VR space. CEO Mark Zuckerberg opened the company's development conference earlier. Take a listen.
When you put on Quest 3, you see the physical room around you. Only now it is a canvas that you can bring your digital objects into the world. You know, Quest 3, it understands your space so you can play with the world around you. You can solve Lego puzzles, or you can build your own creations on any flat surface in your room. You can play games like BAM with your friends sitting around a table, whether you're physically right there together, or even if they're far away. You know, people love working out in Quest. But now, if you're doing a body combat workout, the targets are going to come at you in your physical room, whether you're in your living room or if you're in your home gym. You're be able to look around and see the room around you, so you're going to be a lot more comfortable, swinging your arms and moving your body. The limits of your physical space are going to be able to expand. So you're going to be able to be a part of much larger worlds. There's one point in the Stranger Things game where you can be sitting in your living room or anywhere else, and portals to the upside down open right there. Now, these experiences are possible because Quest 3 shows your physical space with 10 times more pixels than what we had on Quest 2. And it automatically maps the space that you're in using 2 dedicated color camera sensors and a depth sensor, which makes it so that if you pick up a digital ball and throw it at the physical wall, it'll bounce off it. Or if someone's shooting at you and you want to duck the fire, you can just get behind your physical couch.
Dan Howley has already had his hands on these 2 devices, and he joins us now. So what is the verdict, Dan? Do I need
Can I just say something? Even watching that video footage made me feel seasick, Dan.
Did you get seasick, Dan? Did you feel sick? Was the stomach churning? Did they solve that?
No, I'm lucky in that I don't experience the kind of nausea that people can experience when they put on headsets. So I was able to use it without feeling like I was going to yak. But I will say that the technology behind this is very impressive, especially for the price point that they're asking for $499. You get a headset that can do virtual reality as well as augmented reality, this kind of mixed reality, as it's called, where, in one demo, I was playing a Ghostbusters game, and the Stay Puft Marshmallow Man ripped the roof off the room I was in, and it looked as though the roof was gone, and I was looking into this nether realm where the Stay Puft Marshmallow Man hangs out. There was an alien spaceship that crash landed in this faux living room that Meta had set up, and then these little aliens started bursting through the wall, and you would shoot at them, and as you shot the wall, pieces of it would disappear and reveal another world behind it. So, they're clearly trying to get this idea of mixed reality to snowball and kind of take off. I think the issue that they're potentially going to run into is the price point of $499 is right next to what you have for a PlayStation 5 or an Xbox Series X. And, if I'm a gamer, which I am, and I'm going to look at these 3 products at the same price tag, well, I'm going to go for the PlayStation or Xbox, which has, these marquee titles that I can play on my 65-inch OLED TV. Not to brag, but it's a pretty damn cool TV. But, the Meta Quest 3 does have a lot going for it. It's got improved graphics compared to the Quest 2. There was a demo that I saw where it showed kind of a view of how things looked on the Quest 2 and then on the Quest 3, and text was a lot clearer. There was more kind of flourish to textures on different objects. So they're doing a great job there. They're also trying to incorporate more multiplayer capabilities, which is something that I think any good kind of gaming console needs if it's going to get that kind of critical mass. There was a report from The Verge that they had sold year to date when they launched I believe the Quest 2 in 2020. They had sold 20 million units. Well, Sony announced relatively recently that they had sold 40 million units, and they also launched in 2020. So, it's going up against these big names in the gaming space, and that's going to be difficult to overcome for a company like Meta, where they're trying to get this new technology adopted, basically.
Right. I mean, and that's not even to mention, we were showing some of the Apple products on the screen. Apple also, and on the higher end of the spectrum in terms of the price point there. On the other end, you got Snap that is now, it sounds like, closing down its efforts to develop something entirely.
Yeah, so the space is still very early, right? There's the idea of, you have this, I think it's called the trough of disillusionment. And, you get super excited about a product, it shoots up, and then, well, the reality sets in of they still have to develop a lot of it, and it kind of falls down into that trough. And eventually it gets back up there as years go by and things are developed properly. So I think that's where we are with these kinds of technologies. But Meta clearly putting a lot into this. And obviously the Apple side of things, I got to try the Vision Pro, and that was, incredible as well. I think graphically the Vision Pro is ahead of the Quest 3. It's also $3,500. So, the average person isn't going to be able to go out and buy that. If I'm going to buy anything for $3,500, it's going to be a really good gaming PC. Both of these companies are also trying to target these towards the enterprise, not just consumers. So, they want you to be able to go ahead and have virtual meetings in these. I don't know how much that's going to take off. I do a lot of meetings with my camera off, so I don't know if I want to wear a headset and have people, look at an avatar of me even. But, as I said, this is a positive step forward for Meta in terms of the technology. It just needs now to have people want to adopt it more regularly and across the board.
Maybe this will solve our meeting room problem at the office, Dan. Whenever there's critical mass in the office, there are lots of people sitting by themselves in meeting rooms on virtual meetings. Maybe they can just sit on their desks and headsets. There, solved it. Dan Halley, thank you very much. Appreciate it. We got much more markets action coming up live from the New York Stock Exchange. Stay tuned. You're watching Yahoo Finance.
Welcome back to Yahoo Finance Live. I'm Jennifer Schonberger here on Capitol Hill, where it is being dubbed Stand with Crypto Day by crypto exchange company Coinbase and a consortium of crypto CEOs from all around the country who are trying to lobby Congress, lawmakers here, to pass new legislation to regulate crypto. Joining me now in an exclusive interview is Brian Armstrong, CEO of Coinbase. Brian, thank you so much for joining me.
Yeah, thanks for having me.
So you are here on Capitol Hill with a consortium of other crypto CEOs in a new grassroots campaign movement you've dubbed Stand with Crypto.
Yeah, so Stand with Crypto is here to tell people that 52 million Americans have now used crypto. That's 3x the number that own electric vehicles. It's more than hold union cards in the United States. it's a massive constituency, and they're frankly a little unhappy with the US because the US is lagging behind. We don't have clear rules on the books, like 83% of the rest of the G20 countries, for how crypto should be regulated, how consumers should be protected, and how this innovation can happen here in the US. And so there's a couple of bills going through the House right now that have bipartisan support for how we get clear market structure, how we get stable coins in the US, and these entrepreneurs and the 52 million Americans really want this to happen. And so we're here talking about Stand With Crypto. We've got the pins. People can check out standwithcrypto.org and sign up if they want to be a crypto advocate. This is something America needs to get right.
We know that a lot of these crypto CEOs are trying to showcase the number of jobs that are really being created in this country through the crypto industry. I know that you, Coinbase, have also been involved in efforts in Ohio, the home state of Senate Banking Committee Chair Sherrod Brown. Is it really possible to motivate and galvanize people to vote based on crypto?
I think so. Of those 52 million Americans, some of them, if this is a single issue voter for them, they really want to see that this is going to happen here in the U.S. And in Ohio specifically, there's 1.3 million Americans who have used crypto. They've started to see these jobs go offshore. They've started to see the harm that's happened by the lack of clear rules. So I think they're definitely looking at their elected representatives, including Sherrod Brown, to see how they're going to respond to this issue. And are they going to come and put clear rules in place, or are they going to ignore it?
And what are you hearing from lawmakers so far in the meetings that you've had?
Yeah, so we've had some really amazing meetings today with the highest levels of our government and lawmakers. And I think there's a general consensus and understanding from both sides of the aisle that this is an important issue. We can't keep having Americans be harmed and having this move offshore. This is going to be kind of like our 5G or semiconductor moment, where in 5 years we'll be thinking, how do we get this back on shore if we don't do something now? So the lawmakers I've spoken with are all high level aligned to this principle. It's kind of common sense. Let's make some clear rules. But politics, are messy, and so these bills we need to get people from both sides of the aisle to come together on a few little remaining issues. Like, for instance, is there a state pathway for stablecoins in addition to the federal pathway? And I think we as an industry, we're flexible. Honestly, I think there's a reasonable set of places where these rules could land. I'm okay with any of them. I just want there to be clear rules, because in the absence of that, the SEC has just been on this path of regulation by enforcement, or harassment, if you will, where every startup in the space gets a subpoena or a Wells notice, and that's not sustainable, and it's not okay.
To your point, the House Financial Services Committee passed a market structure bill this summer. It's expected to pass later this fall, but dead on arrival in the Senate. Democrats sort of taking issue with the CFTC as the primary regulator there, among other issues. What's the risk that we don't have rules in 2024? Are you talking to Senate Democrats? What are you hearing specifically from Democrats?
Yeah, so actually I would disagree with the idea that it's dead in the Senate. I think that Senators Gillibrand and Lummis, for instance, have put forth their own bill. They're thinking about this issue deeply. And what I hope happens is that we see this market structure bill and stablecoin bill that got bipartisan support in the House come to the Senate and dovetail into those efforts with Senators Gillibrand and Lummis, for instance. The risk is that if this doesn't happen, and by the way, any piece of legislation, nobody can say for sure if it's going to happen. We're going to keep trying this again and again and again until something goes through. But if something doesn't go through, essentially this is going to be decided by the courts. And right now, the SEC has kind of lost zero of the last three, they've won zero of the llast three court rulings. So the courts are repudiating the approach that they're taking. And eventually, if this ends up in a Supreme Court, that's not going to be good for many of what these lawmakers want. And so the clear path here is that it should go through the House and then the Senate. And the administrative branch put out an executive order about a year ago as well, saying we need something clear here. So I hope that they can find alignment as well.
A bipartisan group of lawmakers wrote SEC Chair Gensler yesterday, saying there's really no point in no longer greenlighting a spot Bitcoin ETF, given the recent court ruling. What is your take on that?
Well, I agree with the judge's ruling, which is that the SEC's actions have been arbitrary and capricious and unlawful. And that's a pretty serious thing for a judge to say about this SEC. I mean, the only thing worse they could say is outright corruption and fraud. I mean, arbitrary and capricious and unlawful is a pretty big thing for a court to say about our SEC. So I think they need to change. There's a number of large financial institutions, Fidelity and BlackRock, and the largest financial institutions in the world are now putting these ETF applications forward and saying our customers want to get exposure to Bitcoin. Everybody deserves equal treatment under the law, and the SEC cannot continue to punish crypto even if they wish that it was something else.
SEC Chair Gensler, speaking of, is testifying right now on Capitol Hill before the House Financial Services Committee. He seems to be reiterating much of what he said in the past, that the industry is rife with non-compliance. Certainly the SEC has brought a suit against Coinbase. What are your latest thoughts on the SEC's actions, the enforcement? If they were to win your case, is there a path forward for Coinbase in the U.S.?
Well, as I mentioned, the SEC has gone 0 for 3 on the last 3 judges' rulings, and so we feel very good about our case. Some of the facts that those judges have already ruled on, for instance, that the underlying assets themselves were not securities, multiple judges have come to that conclusion, and that's a key fact in our case as well. So I feel good about the path that's going there, but the SEC, I think they did, my understanding is that Gensler did share something in the testimony today, which is that he believes that the CFTC should have spot market authority. The administrative branch has said that. Now he's finally saying that. Some of these bills that just got bipartisan support in the House also say that. They carve out a clear path for where the CFTC should regulate, and the SEC should have a role in crypto securities. There should be a path to register those, which hasn't happened to date. So maybe we're starting to see some consensus there. I don't know, but there's a lot of people in Congress that are unhappy with his approach.
That was Yahoo Finance's Jennifer Schonberg in an exclusive interview with Coinbase CEO Brian Armstrong on crypto and regulation. Well, the rising rate environment driving mortgage rates above 7%, and while low inventory has supported homebuilder stocks, the reality of high rates is now weighing on shares. Jared Blickery is down on the floor right below us with details on this. Jared?
Hi, Julie. There are some strange things going on in the market. To your point earlier in the show, this is what's happening on the Wi-Fi Interactive today in the home builders market. And you can see some red, some green there, but it's pretty clear. Over the last 7 days, lots of dark red here. Most of these tickers down about 5%, like Toll Brothers, Lennar, DHI as well. And this includes that Federal Reserve meeting where we saw interest rates shoot higher. This is a 10-year, and this goes back to Wednesday last week. And you can see from that meeting to here, we have risen quite a lot. And I think all of this will make a lot more sense if we look at the 30-year mortgage rate, which I have right here in cyan, along with XHB, and that is the S&P. That's the S&P Home Builders market. So here we had these low rates in 2020, 2021. We saw this huge rise in XHB. Lots of fundamental reasons for that over the pandemic. Lots of people moving their residences. Then we saw an inverse relationship take hold, where we saw these rising rates, 1, 2, 3, and then 1, 2, 3. We saw the opposite reaction in the home builders. And then on this latest spurt up in the home builders, that was done actually with rising rates here. Why would that be? I think it's because we put in this top here, and then we backed off of it, and we didn't really see XHB. We didn't see the home builders take a hit until we broke to new highs, and that was very recently, actually about a month or two ago in this market that we're looking at. So I'm going to go back to our heat map, and I'm going to show the price action. This is over the last 7 days. I want to show what's happened over the last month because it gets even worse there. Here's 2 months, and you can see the drops from those highs. DHI down about 15.8%. And just to your point, Julie, on the strange things going on in this market, when we have a market where one thing goes up and the other thing is supposed to go down, it doesn't always happen on a daily basis, but you take the price action in the overall indices today. They seem to have gone up in the middle of the day, retracing all their losses for no rhyme or reason. It's because of the enhanced volatility in the market. It gets into short gamma, really in the weeds. I'm not going to go there, but just to say that things are a bit more volatile and hinky than they have been in several months. So probably more of the same into the end of the month.
All right, thank you, Jared Blickery, bringing us all the action from the floor of the NYSE. All your markets action ahead live from the New York Stock Exchange. Stay tuned, you're watching Yahoo Finance.
Good morning. This is Yahoo Finance.
Big news, 3 things that you need to know.
We just got the announcement.
What happens now?
I got a question.
What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed, fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard
hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings. And they give you information if you watch them closely.
President Bostic, President Investors Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this.
And we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You got to scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
Landmark marijuana financing legislation clearing a big hurdle on Capitol Hill. A Senate committee voting in favor of a markup on the Safer Banking Act, passing the bill. It's now going to head to the Senate and the House for more debate. Now, if the act, if made into legislation, is going to lift the bank, and if passed, is going to lift the banking ban for legal cannabis businesses, that had been in place since it was legalized in many states. With more on this, Emily Paxia, the co-founder and managing partner of the cannabis investment firm Poseidon. You, Emily, have been at the Benzinga Cannabis Conference today in Chicago, so I'm sure this was a big topic of conversation. But Emily, you've been in this business for a while. You've tracked the industry for a while. You've been disappointed before by Congress and the Safe Banking Act, right? So what are the real prospects here? How are you gaming it out?
Yeah, and it's nice to see you again, Julie. Thanks for having us on. Poseidon has been investing for 10 years in the cannabis industry, and we've seen various things occur at the federal level. Like we had the Cole memo, which identified ways that banks could work with the industry. And then when Attorney General Jeff Sessions rescinded that, we've been operating without anything for this entire time. Now, SAFE has passed the House multiple times, as you pointed out. This is the first time this is getting through the Banking Committee in the Senate and going to the Senate floor. And we do think that Senator Schumer will call it to the floor within this session.
And what, Emily, let's say it passes the Senate, it gets to the House. What do you give the chances there in a GOP-controlled House?
Yeah, so what is interesting about cannabis is it actually polls really well compared to other issues across party lines. So this isn't necessarily a cut and dry GOP or Democrat issue. It really does get interest, especially from the constituents of these representatives. The House is a little bit more complicated. It's more complicated than it's ever been for our issue. I think my biggest concern about the House is that we're going into an election year cycle, which is already very noisy, and our House already is having trouble. Look at what's going on with the budget right now. And so I do have concerns that it's not going to be a priority for that House and for it to get called to the floor. But I do actually think we have the votes. I was talking to some political analysts and consultants all day, obviously, as I always do about this. We think the votes are there. It's just going to be whether or not the machinations of how the House works will get it to that point. So we'll be watching more in 2024 on that, but we think it could get done.
Do you think, you mentioned, of course, the budget wrangling and the shutdown looming. Is it possible this gets derailed entirely and this is more realistically a 2024 vote and potential passage?
If I've learned nothing, it's that everything can get derailed, especially when it comes to politicians. It all comes down to their motivations, what's driving their decisions at the time. And so whether or not this is a priority remains to be seen. Schumer says it's a priority, so we do think he will call it to the floor. It does whip up his base because people are pretty passionate about getting this done. I mean, we are talking about perfunctory banking support just to get through the federal level. It's not anything crazy. We just would like to be banked like any other industry. And frankly, if I was a lawmaker, I would be excited about this because it would increase transparency and flow through the existing infrastructure, which is why my friend and colleague at the ABA, Rob Nichols, has always been a big supporter of this issue and has worked closely with groups like Senator Daines's office to get this to this point in the Banking Committee. So there's any number of issues that could take precedent over this. It remains to be seen. But right now, it does seem that we've got probably close to the support. We know Senator Schumer won't call it to the floor unless he thinks he has the votes. But there are a number of senators who are maybe freshman senators, newer senators who are kind of on the fence. And I think that those folks actually could come over to the side of voting this in.
So, Emily, let's bring it to your investments, right? It has been a tough year for cannabis investors. You guys, in fact, recently closed an ETF because there just hasn't been the investor enthusiasm that there had been at various moments in the past. If this thing gets through, is that the turning point here? What is going to sort of salvage returns in this industry?
Right. So we invest in both private and publics, and we've always focused on the fundamentals of the businesses. And when you invest in strong fundamental businesses, that will get you through these vicious public market cycles. So yeah, the timing of this has been difficult. We have thought that SAFE should have passed multiple times over, or at least gotten to from the House to the Senate and gotten to the floor for a vote, but it hasn't happened. And these are the catalysts that a lot of institutional capital are watching for to come in and to invest into the industry. But in the meantime, we just stayed focused on the core operations of these businesses, and they have really interesting business profiles. And some of the top public companies are already showing that they can operate with free cash flow, even in spite of the challenges of the cost of capital, because we don't have banking reform, and also our egregious 280E tax code, which makes the effective tax rate of these businesses above 70%, if you can honestly believe that.
So, Emily, you've been investing in this space, as you said, more than 10 years. You know these businesses really well. In terms of the publicly traded names, what are some that you would be interested in? Is it Tilray? Is it Canopy Growth? Or do you feel like, no, it's ETFs are the better move? How would you invest?
So we're very U.S. focused, especially when it comes to the public companies. I think they've been better stewards of capital and better shepherds of capital, and mainly because maybe they have to be, because we haven't had the inflow of capital. Like Canopy Growth Corp was the benefit of a massive investment from Constellation, and we've seen how that's played out. But in the United States, we haven't had those inflows of capital. And so the operators have been very focused on operational efficiency. So some of the ones that come to the top for me are ones like GTI, or, and again, not advice, but just things that stand out to me. GTI is focused on free cash flow and fiscal prudence and preserving and growing shareholder value. I would say Verano is another company that's been really intelligent about that and really thoughtful for their investors. And then TerraSend. TerraSend is an interesting story because they've actually just uplisted to the TSX in Canada, which gives access to more institutional capital. You can see how it's reflected in the volume of how that company trades now. And simultaneously to that, they've also cleaned up their balance sheet and gotten the business looking really tight, in addition to opening in some of the exciting new markets, such as New Jersey and Maryland. And so there's a lot of things happening in these businesses. So we're always looking under the hood and focusing on the operational metrics that are really driving the growth of these companies.
Emily, good to catch up with you. Emily Paxia of Poseidon. Appreciate it.
Thank you.
Coming up, we've got the closing bell on Wall Street. We'll be checking in on the latest market moves and movers, the top trending tickers. Stay with us.
There it is, the closing bell on Wall Street. Let's do a quick check of the markets. This one's sponsored by Tasty Trade, of course. Swinging between gains and losses today. It looks like the Dow finishes down about 0.2%. Remember, it was up at one point about 100 points. The S&P 500, see how it shakes out here, but it looks like we're going to finish basically flat at 42.74, trying to stage a comeback from losses suffered this month. September, typically, tough for the stock market, and that is the case so far again this year. Tech-heavy Nasdaq tacks on about 0.2%. On the benchmark 10-year yield, obviously a key benchmark for borrowing costs, about 4.6%. Meanwhile, oil prices on the move as well, trading above 93 per barrel. Julie.
Let's take a look at how some of today's top trending tickers finished off. We're watching shares of Occidental Petroleum higher today on the back of a price target raise from Bank of America. The bank hiking the energy company to $82 from $78, and among its oil-weighted coverage, BofA sees Occidental as best positioned to capitalize on near-term oil strength and calls it the firm's top idea. Now, Occidental's been such an interesting story, not just because of what's been happening in the oil markets generally, but also because of the investment from Berkshire Hathaway, which continues to sort of bolster those shares.
Yeah, keeps the buy rating, and to your point, on the near-term oil strength, says his best idea, capital efficiency, deep drilling backlog, and yes, to your point, Julie, the Berkshire put, as the analyst puts, can help mitigate downside risk. We know Berkshire Hathaway, a stake in this name.
Yeah, and I'm just seeing a headline as well that Exxon, speaking of oil stocks, closed at a record high in today's session. So that's interesting as well.
All right, moving on. Shares of Palantir getting a boost today after it was announced that the U.S. Army will be selecting Palantir for a new $250 million contract involving, what else? Artificial intelligence. One analyst saying that while this contract adds fuel to the argument that Palantir is more like a government service provider, this contract bodes well for Palantir's fourth quarter and 2024 revenue. So this name, of course, CEO Alex Karp, never bashful as we know, predicts Palantir will become, he knows, the most important enterprise company in the world, driven by its work in AI. Not everyone, we should mention, believes that. About 40% of analysts on the street have a sell on this name, but still, this one is up, Julie, about 130% now this year.
Yeah, it is. So obviously there are some who are buying into that thesis as well. We're also watching shares of Generac, that stock jumping today, one of the top gainers on the S&P 500, after it reiterated its guidance for 2023 and provided, I should say, an upbeat longer-term outlook. Now, the context here is that Generac last month came out with a terrible report and really caused a lot of concern about demand for its generators. So this is sort of it coming out and now reiterating is at least reassuring, it seems, to some investors.
Yeah, sees 2023 revenue declining 10 to 12%, but still sees 2023 adjusted EBITDA margins, they say, between 15.5% and 16.5%. All right, lawmakers, we know, racing against the clock to avoid a government shutdown. Senate leaders and House moderates working to at least shorten a disruptive federal funding lapse. Here to discuss the latest on where negotiations stand, we have Congressman Mark Molinaro, serving New York's 19th Congressional District. Congressman, thank you for joining us.
Glad to be with you. Thanks very much.
So, Congressman, let me just start by, listen, what you are hearing on the ground. Do you think there's any chance here we could break through this impasse, or no? Buckle up, you think we might really have a government shutdown?
Well, listen, every step is being taken and needs to be taken to avert a government shutdown. But keep in mind, over the course of the last 48 hours, thankfully, and listen, we should be doing this well in advance of a deadline. But here we are. But in the last 48 hours, the House has started moving appropriations bills. As you likely know, I was involved in many of the conversations and negotiations over the last week. The best approach for America is for the House of Representatives to present a conservative budget approach, one that shrinks the size, scale, and scope of the federal government, focuses on border security, and addresses the fact that we can't keep borrowing away our kids' future. That's the best approach. And by moving these appropriations bills today and tomorrow, we're hopeful that begins to generate the support necessary to put in place a short-term funding mechanism, which is necessary. It's in no one's interest to see a government shutdown.
I think we can all agree on that, Congressman, but I would push back on the notion a little bit that everything is being done to avoid a shutdown. It doesn't look from outside Washington like that is the case.
Well, in fairness, deeply held beliefs within the House Republican majority, certainly, and we've been having those tense and important conversations. These are, principled conversations about how do we present something after the Democrats controlled both houses of Congress and the White House 2 years ago and forced trillions of dollars into the economy, driving up federal spending and inflation. We're in a position now where we obviously want to focus on right sizing. But again, navigating that in order to avert a shutdown, is doing as much as we can. We have to obviously come forward with a strong budget plan that reduces federal spending. But again, we understand, certainly many of us, that understand that a government shutdown is not in anyone's best interest. And so there are steps being taken to avert. The Speaker spoke about that yesterday and today. We need a short-term spending opportunity to keep government functioning, to focus on border security as we finalize these appropriations bills.
Congressman, are the Democrats the obstacle to getting this done, or is it actually the contingent of your own party that's been holding this up?
Well, listen, by design or default, Americans have elected a bipartisan government. It's nice to suggest it's only one house, but whatever the Senate Democrats come up with or we come up with must be approved by both. And our message is very, very simple. Yes, we're trying to overcome the differences within the conference, but again, this isn't a theater production. The outcome isn't predetermined. There's deeply held beliefs that are being debated about how you rein in federal spending. We think that, again, the best approach is for us, the House, to come forward with that more conservative approach. But to your point, yeah, we've got to come to agreement. But Democrat leaders also have to acknowledge that the massive amount of federal spending over the last 2 years, and the president living in this some sort of fog where he doesn't understand that the humanitarian and national security crisis at our border needs to be confronted. And let me say to your viewers, listen, I come from New York. You have the mayor of New York City telling the president of the United States that his inaction at the border will destroy the city. Talk about economic downturn. You have the governor of New York, Democrat, saying to the president and the rest of the country, there's no more room in the state, go someplace else. So you understand, we're saying that you have to effectively focus on this crisis along with confronting the massive spending.
Congressman, this handful of Republicans, though, who are throwing up this blockade, I'm interested in what you think is motivating them. And you seem to suggest it's policy. Is it policy, or is it also a problem that they have personally with Speaker McCarthy? Or do you think it's both?
Well, listen, there are some, obviously, who are most focused on the Speaker. I think Speaker McCarthy's done a great job navigating what is a very diverse group of people. But no, I was involved in the negotiation a week ago, and I will tell you that several of those members wanted to be sure that we were serious about taking up these spending bills, that they didn't want to see us do one bill and then back away, or one that increased spending, but none others that reined in federal spending. And we negotiated basically the framework. Now, it took too long, and we should have been doing this obviously weeks ago, as the Speaker had expected, and by the way, our Appropriations Committee laid out. But what they wanted was a commitment to move from A through B and through C and through D of those appropriation bills to show that we mean business about reining in federal spending. And that progress, which we've seen now over the last 24 hours, we're hopeful breeds more progress. And with that, the understanding that the only way we can finish putting forward this responsible plan for reining in federal spending is to include a short-term funding opportunity to keep the government functioning while we focus also aggressively on border security.
And Congressman, I'm just interested on that point you made, that you think the Speaker's doing a great job there. How secure do you think McCarthy's position is? Do you think he does keep the speakership?
Kevin McCarthy is and will remain the Speaker of the House of Representatives. Listen, we get it. It's tough to navigate, and plenty of ideology on the spectrum in full display. But again, the conversation and the progress over the last several days has been really building both momentum for us and the opportunity, I think, to live up to our commitment to America.
Finally, I wanted to ask you about Moody's, one of the credit rating services, out this week and saying these repeated shutdowns, is really echoing what the other credit rating agencies have said. Yeah. These repeated shutdowns could threaten the standing of the U.S. credit rating. How heavily are you in Congress weighting this kind of damage that's being done to the perception of the U.S. as a functioning government and a functioning economy?
it weighs heavily on many, if not most certainly of us in the majority. Listen, we need a functioning government, but we also need one that respects taxpayers. And what Moody's and others have said over the course of the last several years is that you can't obviously have dysfunction and paralysis, but you also can't have this continued avoidance of confronting national debt and reining in spending. And it is that kind of waste, that abuse, that sort of passing to new generations, this massive amount of borrowing and debt that also is undermining America's credit worthiness, and that too has to be confronted. And by the way, that's the heart of the conversation that's on full display today. How do we drive down spending, responsibly respecting taxpayers while confronting the fiscal uncertainties ahead? But again, also that we have to obviously address those crises that we face, like the crisis at our border.
Congressman Mark Molinaro, thank you so much today for your time. We appreciate it.
Well, thank you. Thank you both.
Well, we've got breaking news on Micron earnings. We are seeing the company come out with numbers that for the fourth quarter came out ahead of estimates. Adjusted revenue, $4.01 billion. The adjusted loss per share, smaller than estimated at $1.07. 118 is what analysts were looking for. But the attention is really on the forecast for Micron, and that's what's causing the decline in the shares. Micron saying its first quarter adjusted loss per share will be $1 to $1.14. That is a larger loss than the 96 cents that analysts had been projecting. So too, the gross margin forecast appears to be disappointing for Micron. It's saying its gross margin in the first quarter will be -2% to -6%. Analysts had been looking for a marginally positive gross margin reading here. Now, Micron, as a memory chip maker, very commodified business, very cyclical business, and it has been having a tough year. But analysts had been looking for it to show some improvement here, and it seems to have in the fiscal fourth quarter. The first quarter, though, not as good as expected.
Yeah, I mean, we concentrate on this name because, listen, it is the largest U.S. memory chip maker, and those chips, of course, go into so many end markets, PCs, smartphones, data centers. So it is seen as kind of a read on the gauge of health of some of those end markets. And I know analysts on the call going to be listening very carefully to DRAM and NAND, bit production and shipment. Also, they want to know, does that improving mix help, they say, with an ASP recovery? Remember, this stock was up very strongly year to date heading into this print, about 30%, Julie.
Yeah, exactly. And, you know, some have been talking about this. Is this part of the AI revolution, if you will? Not directly, right? Because it doesn't make chips that sort of directly feed into AI functions. But AI does require a lot of memory in order to do its learning and its operating, right? So there will be eventually more read-through for the likes of a memory chip maker like Micron. But it's sort of in the very early innings, seeming like.
And another thread you're going to listen to carefully is China, right?
Yes,
China regulators moving to ban some Micron products. What does that mean for not just Micron, but what's the outlook for American chip makers in that country in the quarters and years ahead?
Very good questions. We'll be talking more about all of this, more on Micron earnings when Yahoo Finance returns. Micron just reported fourth quarter earnings, beating on the top and bottom line. Revenue coming in above estimates at around $4 billion versus the average analyst estimate from analysts of about $3.93 billion. But the first quarter forecast was disappointing vis-a-vis what analysts had been expecting. Let's bring in Daniel Morgan, Senior Portfolio Manager at Synovus Trust. Dan, it's good to see it. I think there was a lot of sort of investor hope here that perhaps there was a bit of a corner being turned for Micron. Does this forecast dash those hopes, or do you think that's still sort of intact?
Well, it's not overly bad, Julie. If you look at the guidance for the upcoming first quarter, revenue expectations, we're looking for 4.2 billion. They guided 4.2 to 4.6 billion. They obviously guided, as you mentioned earlier, in terms of their loss for the upcoming quarter to be greater than what was expected. I think we're looking for 96 cents on the loss, and they guided higher than that. So we look at those metrics, it's kind of mixed. But you're right, there were a lot of expectations coming into this quarter. The stock has been up about 35% year to date, that we would see some sort of indication that we're getting a turnaround in the memory business. And obviously we haven't gotten into the conference call yet. We'll get a little bit more information, but everyone was expecting the second quarter to be the low point in the semiconductor space, and that we would start to see improvement going into the second half of the year. And obviously we're looking for evidence of that coming from Micron.
And Dan, do you see Micron as a smart AI play for investors?
It's interesting, Josh, because they do benefit from AI. They have two core memory products that they sell. One is called Double Data Rate 5, and they also have HBM3, which are memory chips that are used with AI chips. Probably the most promising is going to be HBM3. NVIDIA is going to be rolling out their new B100 AI chip probably in the second quarter of 24, and it most likely will combine with that product from Micron. But unfortunately, we're not going to get a NVIDIA-like impact from AI on this quarter. I think it's something that's going to play out over a longer period of time. You do have to bear in mind, Josh, that AI is extremely memory intensive. So it does play well for the likes of a Samsung or let's say a Micron going forward.
And how should we think about a Micron versus a Samsung or the other memory chip makers here? As we think about how AI is going to play out, obviously NVIDIA is the big first mover, dominant mover at this point. How should investors be sort of gaming it out along the stack and along its development over the next year?
Well, Julie, I think what we're hoping for is that they're going to give us a kind of a playbook going forward on how AI is going to roll out in the memory space. I mean, if we think of Micron, it's a very commodity-based business, right? It's not like, some of these other chip makers have very specific patents on their products. They have dominant market shares. You look at Samsung and some of these other producers in that space, and, DRAM and flash memory are very commoditized. So, hopefully AI, like I said, because of the growth of it, will generate future business for them and future strength. But I don't think we can look at them as like an NVIDIA, an AMD, or an Intel, or some of these other players. Marvell Technology has AI chips. We have Broadcom is in that space. They are very much more specific in terms of their exposure into AI and will get a much bigger benefit, where Micron is more kind of going along for the ride. Does that make sense?
It does, Dan. Let me ask you also about China. We know regulators there have been throwing up some challenges for Micron. I'm interested, not what you think just about Micron's future in China, but really when you think about American chip companies. A lot of them obviously see China as an important end market. What does that opportunity look like for them, Dan, in the quarters and years ahead?
Well, Micron generates about 11% of their revenues coming out of China. Qualcomm derives about 65%. Give you an idea of the two. Micron obviously had a couple of their chips a month or two ago that were banned by the Chinese government. It wasn't a huge impact on them. But I think what the concern here, Josh, is that we set a bad precedence, right? Which is that, we prevent certain things coming in from China. They retaliate by preventing certain chips to come into their space. And you get this tit for tat. And then all of a sudden it becomes an issue where these companies are starting to say, hey, we could have done more in China, but our products were banned. We haven't quite got there yet, but it is something we need to follow very closely. I'm sure you guys reported about various people in the Chinese government that are no longer allowed to bring in iPhones. So, you know what I mean? This is kind of going back and forth, and hopefully it won't have a dramatic impact. So far, it has not, but it could if this continues.
Dan Morgan, thank you so much for your time today. We appreciate that insight.
Thank you, Josh.
Let's do a quick check of the market, sponsored, of course, by Tasty Trade, and see how we finished up here. Swinging between gains and losses, the Dow finished down about 0.2%, was up triple digits, about 100 points at one point in the session. The S&P 500 basically finishes flat here at 4274. The tech-heavy Nasdaq finishes up 0.2%, even, by the way, as the yield on the benchmark now over 4.6%, Julie.
And we got breaking news from Lululemon and Peloton. The company's announcing a 5-year strategic partnership through which Peloton's going to be the exclusive digital fitness content provider for Lululemon, and Lululemon, in turn, will be Peloton's primary clothing maker. At the same time, remember, Lululemon had invested in, had bought Mirror, then had written down the value of that investment. It's going to close it now by the end of the year. Peloton shares, by the way, are soaring on this news. They've been up in the after-hour session by nearly 30%, which makes me wonder at this point, A, is this being seen as a precursor to Lululemon buying Peloton, A, and B, if it was, why didn't it just do it now? I mean, maybe because it did get a little bit burned by the Mirror acquisition, which did not work out as Lululemon had planned. But this is really fascinating to me. Peloton instructors, some of them are going to become Lululemon ambassadors as part of this partnership. So it's just pretty fascinating.
It is fascinating. The Peloton story is fascinating because we all remember Peloton from the pandemic, family and friends scurrying to get their hands on one, right? And then since then, though, there's been challenges for this company. The CEO, Barry McCarthy, has been working on ways to regroup, to resurge, to pull different levers. It's not just this deal. He's done other deals as well with Amazon, with Hilton Hotels. But it has been a challenge. I mean, you remember, Julie, the company's last quarterly revenue outlook, that came in below what the street was hoping for. So it's been a different struggle here for the company. But announcing these deals, announcing these partnerships, and at least the immediate reaction of some investors here, they like what they see.
Yeah, it does seem that way. I mean, I was just looking as I was sort of tongue-in-cheek to some extent saying, oh, why doesn't Lululemon just buy Peloton here? Lululemon at this point is valued at around $48 billion. Peloton is valued at below $2 billion. At its peak, the company was valued, I'm just trying to look back at its market valuation here, it was valued at about the same size as where Lulu is now. So it was valued at nearly $50 billion, Peloton was.
Remarkable.
Now to below $2 billion. Yep. So Lululemon could, in theory, purchase the likes of a Peloton. Right now is doing this partnership here for this partnership on content. And Lululemon, in contrast to what we've seen from Peloton, Lululemon has performed remarkably consistently. And there was even a fun story this week in the Wall Street Journal that said it's one of the rare brands that is cool for both teenage girls and their mothers to wear, which was sort of a feel-good kind of fluffy kind of piece, but it has shown consistent performance.
Peloton, it is much smaller, but I tell you, and you know this, Julie, when you meet the Peloton customer, it is smaller, but it's a loyal base, and part of the plan there has been just keep that smaller base happy and satisfied.
Sure, that smaller base that once they have a bike, they're not buying another bike.
Nope. So. All right. Moving on, Nike set to report its quarterly results after the bell on Thursday. And here to break down what Wall Street is looking for from that retailer is Yahoo Finance's own Josh Schaefer. Josh.
Hey, Josh. Yeah, so we got Nike set to report earnings after the bell on Thursday. And I want to just run through the numbers first that we are expecting from the retail giant. When you take a look at what we're expecting for Nike on a revenue basis, we're expecting nearly $13 billion in revenue. That's what the street's expecting. Now, that's versus $12.69 billion in the same period last year. On an adjusted EPS basis, we're expecting Nike to report 75 cents of adjusted earnings. That's actually down from what they reported in the same period last year. Last year, Nike reported 93 cents of EPS in that first quarter. And then when you take a look at gross margins, the estimate is for a gross margin of 43.7%. That is also down from what Nike reported last year at 44.3%. So clearly analysts expecting not necessarily a slowdown for Nike on the top line, but certainly some of these headwinds to come to play for the retailer. Some of those headwinds that we think about when we think about the Nike story right now. A general consumer slowdown in North America, is that starting to materialize for Nike? Last quarter, they said it wasn't. Do we hear a little bit different commentary on that earnings call? I'm going to be interested to hear that. Then with Nike, of course, we always think about China, right? China's been a big part of Nike's growth story. They do almost $2 billion a quarter in China alone, but China has struggled coming out of COVID and it hasn't been as robust as people had thought. That's weighed on shares. What do we hear about Greater China tomorrow is a big part of that story. And then a final thing that I'm curious about when it comes to Nike is what they say about wholesale. Nike is a big, big part of Foot Locker's business, and we know Foot Locker has struggled this year. Over half of Foot Locker's sales are Nike shoes. Foot Locker's struggling. Does that mean they're buying less Nike shoes and therefore Nike's wholesale department is struggling a little bit? Analysts right now are expecting Nike's wholesale revenue to fall 4% in the quarter. That's going to be a closely watched number tomorrow after the bell.
Right, if it makes up for it in direct-to-consumer or if it's still relying on wholesale. Really, a lot of interesting questions around Nike. Thanks for laying it all out for us so comprehensively. Josh Schaefer, appreciate it. Well, the United Auto Workers Union expected to expand its strike against the big three automakers. We've got the latest straight ahead.
There's always hope, and I don't believe in a no-win scenario. Like, we understand what a shutdown means to the government, to the American people. I certainly do not want that, and so we also have some other Republicans on the more moderate side that certainly don't want that. It's an interesting situation. I hope that during this weekend we can come to some solution and come back and work it through.
The odds of a shutdown are increasing. Modern, mature governments should not be shutting down. It's certainly a crazy impact, probably an impact on the markets, an impact on the economy, an impact on all of the government operations essential to keep society humming along. And right now, the House is talking about going out for 5 days and coming back next Tuesday. And at that point, they would just have till midnight Saturday to work out a continuing resolution. So things are looking worse than they did a couple days ago.
The real problem right now is Speaker McCarthy continues to be really led around by a very far right extreme contingent in his caucus. Look, at the end of the day, if Speaker McCarthy agrees to put up for a vote in the House the kind of bipartisan proposals that we're sending from the Senate, I'm confident that they would pass. The question is whether he will put the country before his own interests and move forward in that way.
The United Auto Workers Union confirming to Yahoo Finance that it will indeed expand its strike once again if no major progress is made in negotiations. The walkout has become highly politicized, with President Joe Biden making an unprecedented move to join the picket line yesterday, and his Republican rival, Donald Trump, set to make a speech to auto workers this evening, and he's also been slamming the EV industry. Joining us now is Tom Narayan from RBC Capital. Tom, it is good to see you. We've been trying to sort of parse this out and the effect that this is continuing to have on the automakers. But listen, let's dive right into the politics of it, because I think a lot of people are struggling to understand the dynamics at play here. A lot of fingers being pointed at EVs and some of the incentives being given to that industry. In your mind, how much is that is sort of the culprit for the squeezed margins of the automakers, which maybe then are leading them to this negotiation with the workers? How are you thinking about this?
Yeah, I mean, I think a lot of this, we have to put everything in context. There is some degree of political theater here, right? You have both sides that don't really want to cave in. UAW coming in with a very unprecedented high demand, right? A 40% increase in labor costs. And then the OEMs, they have a situation they're facing, which is coming off really high price mix that's probably going to start normalizing. So that is going to pressure their profitability. They definitely don't want to pay higher wages on top of that. They have given in to as much as 20% wage increase. The UAW wants a lot more. So it's definitely a hot topic. I'm sure it's getting a lot of attention. I do think ultimately a resolution will happen, just like it did in 2019. We're in the midst of it, right? It's only been 2 weeks. So there's going to be a lot of discussion in the media and the press about it. But ultimately, we do think it'll get resolved.
And Tom, as you noted, this is getting a lot of attention, including getting the attention of Elon Musk. And he warned that the UAW demands, Tom, could drive Ford, GM, Stellantis to bankruptcy. I'm sure you saw this. He posted on X, they want a 40% pay raise, a 32-hour work week, surefire way, he says, to drive GM, Ford, and Chrysler bankrupt in the fast lane. Let me get your response to that, Tom. Is Musk right?
No, I think that's some I don't know for another way to say it, but that's a lot of Elon speak. I think it's definitely not positive, right, for the auto industry to have 30 or 40% or whatever wage increases. But we were actually run the math on this thanks to Ford that provided some data. Labor costs is actually only about 3% of sales. So if wages or labor costs increased by 20%, it would only be about a 70 basis point hit to operating income. If it's a 30% increase, which we think might ultimately be what happens, it's only about 100 basis point margin impact. So if you're an 8% margin company, it drops to about 7%. So these companies are not going to go out of business by any means. They have really rich balance sheets. They went through the pandemic and made a lot of money. They don't want to pay more, but they can survive this. So I think this
Come on, Tom. We want some drama. We need the sky to be falling. Come on. I'm also curious, since some of this is performative, some of it is politics, not just on the part of Elon Musk or actual politicians, but on the part of the union, on the part of the people running the automakers. What if a lot has been made, not just of what the workers make, but what executives make also? I mean, what if Mary Barra comes out tomorrow and says, fine, I'll take a 25% pay cut? She still obviously would be making a lot of money. I mean, is there any chance in hell that something like that could happen?
No, I don't think so. And I think people realize, right? I mean, all of our pays is based on a free market, right? I mean, the reason why she makes what she makes is because that's what she's worth, right? You could put a CEO in the wrong CEO in that job, and we could lose a lot of people's jobs, right? So ultimately, I mean, look how much money Elon Musk has made for Tesla, right? If I can say something positive about him, right? It's put $800 billion worth, right? So him alone is worth them not needing to advertise because he tweets, and that creates marketing value for the company, right? So a CEO is worth a lot at the end of the day. I think this is, it comes into the political theater debate. I mean, ultimately, she's worth every penny that her shareholders think that she's worth.
And Tom, let me also get your ratings on some of these names. Correct me if I'm wrong, my friend, but I think you've got an outperform or the equivalent of a buy on GM and Stellantis, but a sector perform, equivalent of a hold on Ford. Why basically a hold on Ford, Tom?
Yeah, I mean, it's a relative basis, right? I mean, I think GM is an interesting story here. They're really taking advantage of the IRA. They have a ton of EVs are about to hit, Lyriq, Celestiq, Blazer, Equinox. You got the Silverado, the Hummer, really are hitting the stride right now. The stock is also down like 25% in the past 3 weeks because of UAW, which I think is a little bit of a head fake. I think it goes away. And they're really going to take advantage of the IRA with all of their facilities they're building. Stellantis, I think they're catering to the U.S. market. Maybe they could potentially list in the U.S. 100%. So it's just a valuation disconnect there. It's very cheap relative to high margins. Ford, I think it's just on a relative basis. I think they're figuring out their footing with EVs. Ford Pro is an awesome, amazing business. I think electrification, maybe Lightning and Mach-E, maybe a little bit stale. So they're just figuring out the footing there. So it's really on a relative basis versus GM and Stellantis.
And Tom, finally, I also want to ask you about China, but specifically Chinese-made parts that go into some of these U.S. electric vehicles. As you know, there has been a debate in the White House about how to sort of classify these various vehicles, how much of foreign-made parts can go into them. From what I understand, this would, if it was all U.S., Ford would be at a bit of a disadvantage. Can you talk us through how you're factoring that in?
Yeah, sure. That's a great point. Obviously the facility that they delayed the construction on, it's a partnership with CATL. It's an LFP facility, I believe. And so, CATL is Chinese. So obviously there's some pushback there. But I do have to say, Ford ultimately, remember, their main business is Pro, which is not, electrification is not as critical for the professional business. It's, florists and plumbers and these sorts of folks who buy these products. So ultimately, I think their decision to delay the construction there, I think is more of a function of where they are in their footing. GM, on the other hand, has the similar facilities they're building in a JV with LG, which is Korean and doesn't have those types of restrictions. But they're really pushing forward with electrification. So while, certainly this, the CATL partnership for Ford is having an impact now, apparently, ultimately, I don't think it's as critically bad for Ford, given that their really motivating factor is the professional business, which we don't really need electrification as aggressively, and GM is pursuing it with LG, where they don't have these types of restrictions.
Tom, thank you so much for joining us today. We always appreciate the insight. That was Tom Narayan, RBC Capital.
You got it.
And moving on today, some news from casinos. Coming today, a strike as Vegas hospitality staff have voted overwhelmingly to call a strike against hotels and casinos. Tens of thousands of members of the Culinary Workers Union are currently fighting for new contracts, bargaining for better pay, benefits, and working conditions.
Yeah, this is a very interesting story coming. I mean, these waves of union action, and it's a bit of a paradox, if you will, because union membership overall has been declining for quite a while in the United States.
Down to about 10%.
But we have union actions that have been on the rise, whether we're talking about the UAW, the Hollywood writers or actors, right? Or a Starbucks or Chipotle workers that have also been starting to organize, Amazon as well. So the list is long and they're quite visible. This one also is visible. As we saw today, it doesn't seem to be affecting the stocks. These stocks have not done great year to date. It's sort of a mixed bag, but none of them has significantly really outperformed the market. And we're talking about a lot of workers here in this case. The Culinary Union is the largest labor union in Nevada. It represents about 60,000 workers statewide. And so we're talking about 53,000, I believe, in Las Vegas specifically, that are eligible to participate in this strike.
To your point, the bigger picture, though, I think you made a good one. It's actually almost tough to keep up with the number of strikes at this point because it covers so many companies and sectors and industries. It's I mean, as you said, it's airline workers, it's UPS workers, UAW, Hollywood. It does feel, Julie, like maybe the pendulum is trying to swing back to labor a bit, because not only are they striking, though, when they get to the table, they are securing better pay. That complicates the picture for the Fed. It also complicates the picture for investors, because you begin to think, like, if that is the trend and it continues and broadens, what does that mean for profit margins?
Well, I would argue the pendulum has been in labor's favor and in workers' favor over, coming out of the pandemic, when we have seen such a tight labor market. And I've been asking, when is the pendulum going to swing back in the other direction? Obviously, the unions are not judging that the labor market is loose enough yet, that they don't have.
They think now's the time to strike.
Exactly.
Yep.
So that's a really good point you make, though. If I'm the Fed and I'm watching this doesn't indicate that we are going to see maybe unemployment go up enough.
If you're Jerome Powell, you're thinking
inflation
wages are going up, right? Complicates his job.
It does, yeah.
All right, well, coming up, we will toss it back to our studios and check in on some of today's top trending tickers. Stay tuned for more Yahoo Finance on the other side.
Hey guys, welcome back to Yahoo Finance Live. Joining me now is Dan Howley and our good friend Josh Schaefer, as always. Let's talk about some of these trending stories today. Big news here with the UAW. Yahoo Finance has confirmed with the UAW that they will expand their strikes tomorrow, the stand-up strikes, if there's no major progress made with the big three. So we're seeing the UAW again going to do that. This is the second expansion potentially after last Friday, when they went to 38 parts distribution centers just for GM and Stellantis, not Ford, because they felt Ford had made some progress with them in their talks. This comes as Trump now, guys, is going to visit Michigan after Biden, but he's going to a non-union parts center called Drake Enterprises, of course, this being Trump, but there will be supposedly some auto workers there. A lot going on in Michigan right now, a lot going on in the world of automakers, and I'm not sure what you guys think about this, but I think this is sort of like, we keep hitting more and more new sort of terrain here for this whole battle.
I mean, it seems like the UAW is certainly living up to what they said they would do, right? They said consistently, basically no matter where, it seems like no matter where the negotiations go, as long as they don't sign a new contract, come that next Friday, come the next deadline, they're going to ratchet it up another notch, because they have made progress with Ford. So you were wondering, okay, you've started to make some progress. Do you not want to then, extend the strike, hurt the auto workers more, or the auto companies more? But it seems like they don't care. They're like, no, we're on a process here. No matter where the contract negotiations are at, even if we're very close to signing, we're going to follow the schedule, which I think seems to maybe be working at this point. It's hard to tell because we're not in the negotiation room, of course.
Yeah, it's interesting seeing the kind of political movement now, with Trump going to a non-union shop, but also talking to union workers.
They said current union workers and some non-current workers, so maybe some ex-workers. It's just going to be at a part center. Who knows who's going to be there? It could include some UAW guys. It could not. But that's what they're sort of saying. And he's going to go there to address auto workers. Who knows who's going to be there?
But then we also had Biden there on the line.
On
right?
the line.
On the picket line, right?
Yep, went to a GM center, part center, yep.
So now is it, that they are props at this point where, there's this, the workers are trying to get better rates or, less work less hours or fewer hours, and now you have presidential candidates just showing up and being like, "Hey, what's up, guys? You want to hang out?"
Well, I will say it was a pretty powerful scene yesterday to see the president of the United States go to a picket line. There's maybe a few dozen workers there, and they were sort of just, wow, the president's here supporting us, and he said, "You guys have kind of done a lot for the country. You guys deserve more." So that's a big sort of chip in the kind of the pot for the UAW. Also, we quickly want to add that tomorrow or Friday, they could not strike at Ford, or they could ratchet it up at Ford and maybe back off GM or Stellantis if they feel they're making progress. So we'll see what happens. So it's a very interesting chess game they're doing.
And the political chess game too, as you said. Yeah. If one person from one party goes, the other party's going to feel like they have to go, right?
Yes.
And that's probably something we're going to start seeing business-wide, industry-wide, as we sort of heat up in the political season.
Well, I'm watching Meta, and they just announced a number of new products, basically 2 new headsets, a VR, AR mixed reality headset called the Quest 3. This is their response to Apple's, let's call it somewhat expensive $3,500 Vision Pro. This bad boy is $499, so the same as a PlayStation or an Xbox. It has those 3 little slots. They're not air vents or anything. They're cameras, and you're allowed to see the whole world when you have it on. You can also see the world when you take it off, though. But it's basically supposed to be giving you a sense of virtual reality meets augmented reality. So if you look down at a table, or I looked in front of us, I could potentially, have a big screen TV set up in front of me, but still see you guys on the periphery. And it's interesting that they're moving in this direction. This is where Mark Zuckerberg wants the company to go. This is the kind of jump into the metaverse almost. They also announced a second pair of glasses with Ray-Ban that allow you to take photos, listen to music. They look great. They just look like regular Ray-Ban glasses. They've improved the camera quality. They've improved the audio quality. There are better lights on there to indicate when you're taking photos and videos, so you're not a creeper on the subway just snapping off shots.
I was going to say that. I was going to ask about that, because the concept of a camera on glasses or sunglasses feels a little odd.
Well, it's interesting because Google had Google Glass how many years ago?
Yeah.
And that basically just fizzled and fell apart. Now we have these glasses coming that are still relatively expensive, $299. It's not going to break the bank necessarily. It's not $3,500, but it does offer these capabilities. You can also live stream to Instagram from them, so they're interesting. And I used the prior version; they were really useful when I took my nephew out to the zoo. But are we going to get to the metaverse?
So that's what I was going to ask about this headset, right? Because I felt like the first Quest I think it was the first Quest, right, that did particularly well over one of the holiday seasons, sold very well, but we haven't seen Reality Labs as a unit, obviously, do what it needs to do for Meta. Is this a key turning? Do you feel like this headset is the key turning point? You said this is what you feel like is their real push into the metaverse. Are we judging this holiday season that closely when it comes to the headset, or are we still just not there yet?
They have a lot of products in the pipeline still. This is its kind of real push because of the augmented reality aspect of it being, this full color pass through.
Different, right?
Quickly want to say that, noting that what you said when the addition of the AR stuff, sort of following Apple here, right, with the big Vision Pro coming out, I think next year, right? This is significantly cheaper than Vision Pro, and probably not as powerful.
No.
But I think it's a pretty cool comparison if I can do both VR and AR in the world of Oculus and Meta, who have a pretty substantial ecosystem right now. Who knows what the Apple one would be like that? But this should be exciting to check it out.
It's a cool headset. Now imagine if you could play Spotify in there, and everyone could add to your playlist. That's my story today. That's what we're looking at. I was looking at Spotify shares throughout the day today. Spotify out with an interesting new feature it's called Spotify Jam, which allows people to add Essentially, at the highest level, my understanding of it is you can add to the queue even if you're not the person controlling the Spotify playlist. So if you're at a party, you can have multiple people in a group all adding to the song queue, so then you can basically create a playlist together.
Great.
You think it's great.
It's awful. It's the worst thing in the world.
But then you have people playing terrible music, and you don't know what they put on because they didn't ask you. Yeah. There's something sort of, I don't know, you like being able to control it. You trust the person that has the aux. And now we're giving everyone the aux, and you're not going to know what they put on. That could go really bad.
So we'll cue this, the Nickelback memes that we see where people put it on and get mad and they start singing to the song, right? So you could hijack a fun party list and put some crap on there. But I think overall, like you mentioned car road trips, parties with friends, like. Oh, give me the phone. It's like you want to all hop in there. Like no, now we can all hop in there, and maybe you as the party invitee can be like no, done. Like maybe there's a guy who can control the list.
Yeah.
Cut that off.
That's part of it. Where you can actually jump in and say no, veto this nonsense. Yeah. I mean, it's. I said it's the worst feature. It's not.
Right.
It's but the fear is that someone's gonna have awful taste in music, and they're going to jump on there and be like, "Hey, let's listen to this." And it's like, no, you've ruined the barbecue vibe. But I have friends over, and I regularly just get on Spotify and pass my phone and like put music on, because I don't know what to pick. We're just going to listen to awful '80s hair metal.
But wouldn't it also work that if like we're all across the country, we're buddies, and we're like, oh, let's make a cool playlist that we all like to listen to new songs. We can just keep adding stuff to them and listen to them individually, right? Like that's part of the deal, right?
Yeah,
I would be very into that.
Basically.
Yeah. I think there's a group sharing aspect of it, and also a smart play from Spotify to have it be Spotify Premium members only, right? You don't want to be the person at the party that can't add to the playlist. So I thought that was a nice little touch as well. All right, we're going to have to go create a playlist upstairs, and we'll all have to yell at each other if we don't like the choices. But there'll be more Yahoo Finance Live on the other side.
It is closing time here at Yahoo Finance. Here's a look at some of the top stories of the day. With the writers' strike officially over, late-night talk shows, they're coming back. All of the major hosts, Jimmy Fallon, Seth Meyers, Stephen Colbert, John Oliver, and Jimmy Kimmel, all of them announcing that their shows will be back on Monday night. These were the first shows affected by the strike back in May, and now they'll be the first to return. Kia and Hyundai recalling millions of vehicles in the United States. The company is issuing the recall over the risk of fires, warning owners to park their cars outside and away from structures until repairs are complete. More than 1.7 million Kias from 2010 to 2017 are affected, while 1.6 million Hyundais from 2017 are included in the recall. And Lululemon and Peloton are striking a 5-year strategic partnership. Peloton's going to be the exclusive digital fitness content provider for the apparel maker, and Lululemon will be Peloton's primary clothing maker. Lululemon, at the same time, will discontinue sales of its mirror by the end of the year.
And time now for what to watch on Thursday. On the earnings front, Nike reporting its first quarter results after the bell. Investors looking to get a read on how consumers are holding up amid fears of a spending slowdown. And meanwhile, prospective home buyers can expect the latest weekly data on mortgage rates. The Federal Reserve paused their interest rate hikes. Mortgage rates continue to linger above 7%. Housing demand cooling off and home builders feeling the pressure amid elevated rates. On the economic front, initial jobless claims out Thursday morning. Economists estimating claims to rise to 215,000. This coming after applications for U.S. unemployment benefits fell to the lowest level since January. And lastly, investors can look forward to remarks from Federal Reserve Chairman Jerome Powell. Julie.
Well, that'll do it for today's Yahoo Finance Live. Be sure to come back tomorrow. We'll be back 3 p.m. to 5 p.m. Eastern. In the meantime, have a great night.